Ladies and gentlemen, in this video, I'm going to explain about why risk management is very, very important. So for that and more, watch the rest of the video. All right. So what you're seeing right here is just happening right now. Let me just show you what happened before all this. So this was the trade we took today. This is a nice rally-based drop supply zone with what we call trend line liquidity right here. You can clearly see we had clear equal highs. Trend line right here. And so the market taking out this trend line liquidity. And then on the lower time frame, you actually see that the market rejected beautifully and dropped about 17 pips in our direction. Let me just show you. If you go to the lower time frame, I was able to actually enter the market right here. When the market gave us this nice pin bar right there, we were able to jump in and the market dropped about about 13 pips, and you can clearly see that our stop loss initially, our stop loss was like 10 pips. So that was almost like 1 hour. And then you can see that the market actually broke this low right here. So when the market breaks the recent higher low, we have to move our stop loss to break even right here. So the market then tried to misbehave, then push to the upside, and we were taken out. Now, imagine a situation where you were stubborn because you thought the market was going to go in your direction and you didn't put a stop loss, or you actually later removed the stop loss because you thought the market was going to continue to go in your direction, right? Now look at this. The market has pushed to the upside about 113 pips. This can literally blow your account or can really cause really, really bad damage. And or you can just avoid all this by making sure that you are predefining your risk every time you enter the market. Make sure you know exactly what you are risking on that particular trade. Know for sure how much am I risking and how much am I comfortable risking. And once you do that, you make sure that you take the trade and think in terms of probability, because this was a beautiful setup which I can take anytime. But look at this. This setup has failed terribly, right? Was there a way for us to know? No. There's no way I've predicted, because we have traded these kind of setups and they've made plenty of money using the same setups. But like I always say, the market works in terms of probability, and there's absolutely no way for us to know in advance what's going to happen. Therefore, that risk that we're actually assuming is the amount of money we are paying in order to find out if that particular trade is actually going to go in our direction. That's the down payment, that's the payment. So that's the payment you pay in order to find out if the market is going to go in a direction. If the market goes in a direction, well and good. If it doesn't, well, you've just found out, and that's the cost you've incurred. And that's okay. Remember, you're supposed to be okay with that risk, and I recommend risking between 0.25 to at least maybe 1%, or if you are really extreme, go up to 2%. But for me, I would actually encourage you from risk from 0.25 to 1% max on any individual trade, and have a long-term mindset. Take all setups that meet your criteria, because you don't know which setup is actually going to make you money. You have no idea which trade is going to make you money. So, for example, this trade was a 1 to 26 to 1 ratio, and we just lost 1 hour. And you can clearly see right here, we took other trade, which was Euro Swiss. A really beautiful setup right here, rather best drop supplies on equal highs right here. They were taken out, and the market came to this level right here, giving us a beautiful pin bar right here, as you can see. And was able to take this. Let me just show you here. I was able to take this trade. Also, it's still not moving as expected, but so far it's in profit, and you can clearly see that the market has moved slightly, just about 4 hour in profit, and meaning you've covered 4 losses with that trade alone. So it'll be nice to see the market pushing to the downside and giving us all that, and you can clearly see that I'm actually in this trade as well. was able to take this trade from there. And right now, I'm just going to go ahead and actually move my stop loss to break even. All right, so you can clearly see I entered from somewhere here, and then the market is now right there. So right now, what we're going to do is just let the market do what it has to do, because we have no control over that, right? So I'm targeting these lows here. I'm targeting these lows right here. So it's really a potentially good trade. But guess what? Like always, we can never know in advance. Like we have no idea what's going to happen. So what you can do is uh just let the market do what it has to do. Let the market do what it has to do, because we've already assumed the risk. So I'm targeting about how many pips? About 380 pips. So let's see what this trade is going to do. So for now, just make sure that you are always predefining your risk. It's very easy. For example, let me just show you. Uh this was Euro USD, right? This was a Euro USD. I mean, risk management is very cardinal. That's the only thing that's going to keep you in the game. So Euro USD, for example, use any position size calculator. So right here is Euro USD. Euro USD. Let's say, for example, you have $10,000 account. Okay, and you are risking, let's say, you're risking 0.5%, and then the number of pips is 10 pips right here, and then just hit calculate. It's going to give you how much you are risking on that particular trade and the lot size you are supposed to use. So meaning on this particular trade, you'd have just lost $50 and it would have been taken out right here with a small loss, rather than holding on to this bigger loss right here, or without going in this particular trade because you think it's a beautiful trade and you don't predefine your risk, you end up entering, and then you'd have lost a lot more. So you can avoid all this by simply religiously following your risk management every time and being consistent with that. All right, so really hope that you found some value in this video. If you have, make sure you subscribe, like the video, comment in the comment section. Until next time, goodbye.